And we thought it would be just NVIDIA week, maybe even Salesforce or Snowflake. But then came the turmoil of the market. The bears woke up from their hibernation saying, we are still here. Let us play the game of the stock market. And then we got a red February. So we're going to summarize the month of February. We're going to look at all the new, not all, but the highlighted news for the week. We're going to talk about April. And what else? If everyone's bearish, maybe it's time to be bullish. Let's start. So hello, everyone, and welcome back. If you're new, my name is Micah, and the channel is called Stock Talk with Micah Stocks. Everything and anything that you see on this channel is not financial advice. It's only for educational and entertainment purpose only. If you can subscribe to, if you want to subscribe to the channel, and of course smash that like button, that would be amazing. And without further ado, let's look at the red performance of the S&P 500 for the February month. Minus 1.4. Dow minus 1.5. Nasdaq down 2.7. And the Russell down 5% for the month of February. A very bad month for the market. When we look at the Magnificent 7 or the Heavy 8 or whatever terminology you would like to choose, you can see NVIDIA and Apple are the only two magnificents that are positive for the month, and the rest negative. And if you even look further for Google, down 16.5%, and Tesla down 27.5% for the week. Didn't we say that Elon Musk is the best friend of Donald Trump? Why is the stock performing this way? Or maybe that is the reason. When we look at the indices themselves, you can see that more than half of the indices are actually on the green, with XLP up 5%, XLRE, which is the real estate, up 4%, and even the energy up 3.8%. So why did we feel that February was so bad? Because communication was down, technology was down, and of course, consumer discretionary were down. When these three are down, usually retail investors feel the pain. The reason for that is most of the stocks that retail investors hold are technology, consumer discretionary, and of course, communication. With Magnificent 7 being a huge part of it, that automatically explained the difference. And add that Russell down 5.8% with a lot of small companies like Palantir, AppLovin, and others. You got the clue. Crypto market did not become a safe haven. Bitcoin down 17% for the month. Ethereum down 32% for the month. So no one wants to buy crypto anymore. That's it. Only when it's at all-time high. And commodities, natural gas up 25%, while gold, silver, not too much. They're at all-time high. At least gold is at all-time high, and crude oil down 3% for the month. That brings us directly to extreme fear. We are at the CNN Fear and Greed at a reading of 20, which is extreme fear. History shows that if you buy the S&P 500, except one occasion, if you buy the S&P 500, and this is not financial advice, but if you buy the S&P 500 when we're at extreme fear, you will be granted with gains at least a month later, if not earlier than that. So it makes a lot of sense when we're at extreme fear yes, it's ugly. It's not fun. Everything is down. I know all the excuses. Buying at extreme fear usually provides better results than buying at extreme greed. Why aren't people buying that? Why aren't people buying when we're at extreme fear? Because we are now at 60% bearishness. AAII, the American Association of Individual Investors, came back this week, February 26th, with a reading that is historical. Only 6 occasions that we had this kind of bad reading. Why are people so bearish? When you look back at all the other occasions, it's when the market went down 25%. Friday, was the point that we went down from all-time high 5%. That's all. Why are people so bearish? It could be related to politics. It could be related to what they feel. It could be related to inflation. It could be related to job openings, or it doesn't really matter. People are bearish, and usually that's a good indication, not financial advice, to buy at least the major averages. Let's dive into the news, and I assume you did not miss the grotesque, strange, powering. I don't know what's your political affiliation, but the meeting between Vice President J.D. Vance, President Trump, and President Zelensky, I went from right to left, not going through power and rank. It's probably, everyone's going to talk about it. Now, will it impact the markets? It's a very, very good question. No one really knows if it's going to impact the market. Not only the Ukraine situation, but also how other countries will or will not side with the US, tariffs. A very complicated situation. You probably have seen it. If you not, just look at that 7 minutes and you'll probably get what I'm talking about. Okay, NVIDIA reported crazy and amazing numbers. As you can see, their revenue by segment is going up like crazy. Just to give you context, this is 2 years ago. This is now. That's how crazy the revenue went up. And yet the stock went down. The reason, at least 8%. Why did it go down? Well, up until now, for the last 2 years, every time they reported, they beat the revenue estimates, they beat the earnings estimate, and they raised the forecast by some kind of percentage. This time was the lowest that they beat the expectations and raised by the lowest amount. Now, you can say the analysts are better. You can say NVIDIA is worse. It doesn't really matter. At the end of the day, when you look at their financials, they're an amazing company. Other things that impacted the market this week, President Trump, tariffs, a lot of uncertainty in the market. No one knows exactly how much they're going to pay and things like that. Uncertainty is not healthy for a market. Intel delays a $28 billion Ohio chip factory to 2030 or even maybe to 2031. Intel doing Intel stuff. Friday, March 7th, we are going to get the first ever crypto summit at the White House. Will it be the day that strategic reserve is going to be announced? No one really knows. GDP comes in negative after 2 years of gains due to government efficiencies, the Doge, and of course, acceleration in unemployment. Walmart CEO Doug McMillon just said American consumers are showing signs of stress. That's never good. And of course, this is impacting Fed's decision in the future. Jamie Dimon says that he's quite suspicious on the inflation readings because he believes that prices are going up, although inflation isn't going up as it should. Microsoft retires Skype after 21 years. Zuckerberg and Meta are planning to develop a standalone app for their AI called Gemini. China is going to retaliate on any tariffs that US will put on them. Google announces layoffs. Autodesk announces layoffs. HPQ announces layoffs. Starbucks announces layoffs. Washington, D.C. initial jobless claims are rising. All these things create pressure. They impact GDP and other metrics as well. It's never good. But for the stock market, layoffs are not bad. They're never bad for stock market unless they're coupled with revenue that is going down. Since we're after most of the earnings and revenues aren't going down and and earnings aren't as well. It's news, not more than that. Sam Altman and OpenAI releases GPT 4.5. That's a technological news, but on the other front, read this line. We've been growing a lot and are out of GPUs. But NVIDIA stock is going down. They're out of GPUs. You're going to hear in a second from Andy Jassy, who says, I'm out of GPUs as well. I wish I had more. And NVIDIA stock is down. Microsoft launches a Copilot app for Mac users. I haven't downloaded it yet. I should. Not that I'm using Copilot, but I'll download it. Who cares? Tesla. In a regular world, this piece of news would push Tesla stock up by 5 to 10%. In today's world, with Elon Musk attending cabinet meetings, everything is political. Tesla files an application for California transportation permit. They want to start Cybercab, Autopilot, whatever you want. Compete with Waymo. Microsoft urges Trump administration to relax the chip export curbs. They're feeling the pressure from others. Amazon unveils their first quantum computing chip. IonQ acquires a company in quantum space and also forms a strategic quantum partnership with SK Telecom. Apple reaches a pact with Indonesia to end the iPhone sales ban. And the Jassy, we talked about it, says he has so much demand, he doesn't have capacity to monetize it. Also, Amazon unveils the revamp of Alexa Plus. Alexa Plus, you working together with Anthropic. You probably know it as Claude. Giving Alexa more of a human feeling to it. Microsoft starting to testing a free version of Office Suite, competing with Google's suite of products, which are competing with Microsoft's suite of products. They're competing with Google. Yeah, you understand how it works. Google signed a $2.5 billion cloud deal over the next 7 days with Salesforce.com, which had earnings this weekend. They weren't that good. Or they were very good earnings, but not as the market expected. Market expected a lot more. Citadel Securities are looking to go into the crypto trading. Well, apparently there's a lot of money in crypto trading. So why is the crypto market going down? Was that the last flush before the run-up? No one knows. And last but not least, again, another headline that should have pushed Tesla stock up. Tesla set to launch full self-driving in China. They already released the version, at least to the best of my knowledge, and people are downloading it. China, the most complicated streets in the world, with streets that change their behavior according to time and space and, a lot of things. But those are the headlines for the week. Let's talk about next week and also the month of March. When we look at the performance of February, we knew that we are probably going to have 2 bad weeks. And we got the 2 bad weeks. Now we're at the beginning of March, which starts actually very good. The first week should be okay. Then we get the second week, which is kind of volatile. Then the third week is okay. Then March is going to be volatile. Upswings and downswings. The reason for that is when you look at the presidential cycle, we are still at the Q1. And when we're at Q1, the gains should be muted, 0.1%. And that's where we are, basically. A lot of volatility, 1 week up, 1 week down. It's a great market for traders, a very complicated market for non-professionals. And of course, a long-term holder doesn't even care. Extreme fear like we got last week and we're still in are amazing opportunities, at least for the long-term holders on the major averages. This is not financial advice. What are we having this week? Nothing much. I can run through the days. I'll stop on Friday because 8:30 a.m. Eastern, we're going to get the jobs report. And then we're going to hear how bad the situation is. From earnings perspective, we're getting a lot of retail this week. From Target to Best Buy to Foot Locker to Abercrombie & Fitch, BJ's, Costco, Kroger, Gap, a lot of earnings from retailers. We get also a few smaller companies like ASTS, GitLab, Okta, and others. We're getting from CrowdStrike. And we're also going to hear from Broadcom. Very interesting week, kind of sporadic on the different companies that we're going to hear from. But that brings us to the S&P 500. I want to talk to you about what happened on Friday and then on the zoom out. On Friday, around 1:15 p.m. Eastern, S&P 500 went down 5%. To be precise, 5.4%. I'll go down in the zoom to 15 minutes of candles. You can see that for the last few weeks, we went down, or actually since the February 19th, we went down 5.4%. When we got to 5.44% exactly, 1:15 p.m. on Friday, deep buyers stepped in. And they stepped in with a vengeance. They stepped in and pushed the market up by 2%. 2% from 1:15 till 4 p.m. Why? Because they said, okay, we got the correction. From a numbers perspective, 3.2 times in average every year, we get a 5% correction. We got the 5% correction and they stepped in. What does that mean? When we look at the daily performance of the chart, you can see that we are bouncing on our trend line, the trend line that started October 27th, that bounced again August 5th, bounced again on Friday. As you can see, I'm going to delete this 5%. And you can see we bounced on that trend line. Nothing special. Yes, it felt ugly. It felt like a bad 2 weeks. Things went down. But at the end of the day, it's regular performance of the stock market. We still have our highs at around 6,100, which are our resistance. And this is our trading range. As you can see, we're at the same trading range that we were in the previous 4 months, with the bottom channel being around 5,700, the top around 6,100. And until we break up or break down, we are still at the same area. Yes, it feels ugly. Yes, it feels like we're falling and everything is falling. But at the end of the day, stocks that went up very, very fast and very, very rapid are just correcting. That's very, very natural. We're not yet seeing cracks in the S&P. Underneath the surface, yes. But on the major average, no. Nasdaq, same thing, no. But we will see in the next few weeks. Thank you very much for listening. If you like it, now you can smash that like button. Thank you very much, and I'll see you next week. Bye-bye.